Kenya's economy is showing tentative signs of recovery. Affected by the global economic slowdown, Kenya's national output stalled in 2008, and the country's government drew on an emergency loan. Economic activity is rising again, as the world economy shows early signs of recovery. In addition, Kenya drew on the IMF's Exogenous Shocks Facility, a loan arrangement designed to help low-income countries cope with emergencies caused by events beyond their control.
Kenya's strong growth momentum stalled in 2008 in the face of high food and fuel prices, soaring maize imports due to domestic drought, and the global financial crisis.
The global economic slowdown had reduced foreign demand for Kenya's exports. Poorer foreigners also stopped coming to Kenya as tourists or shortened their vacations, reducing a key source of revenue and jobs for Kenyan citizens.
The main challenge is to accelerate and deepen economic growth as a basis for reducing poverty in Kenya. And around that bigger challenge, of course, a number of issues around moving ahead with Kenya's efforts at reform, technical assistance, policy advice, and should the government be interested, of course, to consider the provision of financing as well. And so we're looking forward to a continued deep dialogue and relationship with Kenya as it seeks to address what are formidable challenges in the months ahead.
Government policy changes and external financing help to cushion the crisis impact on the poor and vulnerable, as well as protecting social spending on hospitals and schools.
After 2007, the enrollment went down because most of the parents were affected. So the campus affected them. They carried their children back home. So the enrollment in the schools went down. It went down. But up to 2008 March, they started catching up now. The enrollment again is now started picking up because parents were able now to come back and resettle their children in the schools.
Kenya's fiscal 2010 budget targeted additional spending on infrastructure, food security and pro-poor programs. Kenya's government envisions accelerating economic growth in the medium term and making Kenya a middle-income country by 2030. As elsewhere in Africa, the private sector will have a large role to play.
Efforts by sub-Saharan Africa's governments to open their markets yielded strong results in the mid-2000s. The private sector became the main engine of growth.
Dominique Strauss-Kahn, speaking to students at Nairobi University during his March 2010 visit to Kenya, saw several strong signs of an African economic revival.
All across the continent, we see signs of life, rebounds in trade, export earning, bank credit, commercial activity. And the forecast we have in the IMF for 2010, while not being exactly what we had before the crisis, begins to be much better. We forecast something which will be around 4.5% growth. So I think we can say now, really, that Africa is back.
Domestic policy changes and improvements in the world economy are helping Kenya turn in a better economic performance in 2010. IMF financing and further structural reforms should help the country resume its strong growth momentum of earlier in the decade.